Boom shakalaka, what's going on, everybody? Randall here from Crypto Love. I am joined today by the Token Metrics team. We got Ian, we got Jad. What's up, guys?
Hey, what's up?
What's up, Randall?
Hey,
Yeah,
good
how
to
you
see
been,
you.
man?
I'm doing great, living the life here in my mom's basement. And,
That's quite the life. I
yeah,
put up a run.
absolutely. Everybody's loving the bull run. Everybody's loving the Token Metrics pick Matic. This is something that Token Metrics you guys had recommended back when it was like 2 cents. And I know personally, I picked up some. I put it in the Celsius wallet where it was getting 16% interest and just let it ride out. So that was a great pick from
Nice.
Token Metrics. But
Yeah, I mean,
other
yeah,
ones
Matic
recently
Polygon has
that
been doing pretty well. It's actually
Mhm.
now become my largest holding. I was joking with the team. I have not now I have more Matic than Ethereum, which wasn't planned, but it's just been really on a huge rally and a huge moonshot.
Yeah, it's pretty incredible because it seems like Matic is taking a lot of the gains that people expected to see from Ethereum.
Yeah, that's true. That's true. I mean, they've really just elevated the entire use case, pivoting from being just layer two scaling to now being interoperability for Ethereum. Because now almost every DeFi application from Aave and all the big ones, they're now moving over and porting part of their technology into Matic and Polygon, right? So I think for me, Ethereum and Polygon slash Matic, they're joined on the hip, right? It's pretty much a double play, double. Right? The way they both go is the way they all go.
That's awesome. So before we get into things, because we do have some questions from people about token metrics, but first just give a brief introduction of yourselves, and then we'll give a brief introduction of token metrics. Ian?
Yeah, my name is Ian Belina, founder and CEO of TOKENMETRICS. I've been in crypto since 2016. People know me from my spreadsheet back in the day in 2017. The spreadsheet was pretty popular, was getting over 1 million visitors per month. People saw me document my trades, my investments in crypto using a data-driven approach to investing. They saw me turn 20 grand to over 5 million. Now taking that same system and I've turned that into a website and a web application called TOKENMETRICS, where our customers can leverage the same mindset, same philosophy and system using machine learning now to become better investors in crypto.
Fantastic.
Yeah. And I'm Jad Hajali. I'm the quantitative analyst at TokenMetrics. I've been working with TokenMetrics for almost a year now. I have a background in financial engineering. So basically, I have been working on building the indices, building the trends indicator, working on the quant grades, and all this tech stuff. So great to be here. Thanks for having me.
Awesome. Yeah, thanks both of you for coming out.
Now,
So
Jad's very humble, though. I mean, Jad just graduated last year from Columbia, Ivy League. So don't be humble, Jad.
Yeah, that's true. I had a good time at Columbia. It was really nice learning with like really good professors. Financial engineering there is pretty big. It's super competitive, very nice, and yeah, no, I'm glad where it took me.
definitely. So you're a quantitative analyst, and right now the quant grade is what you're using on token metrics. So what really is the quant grade, and why is that better or different than what was available before?
So
All
I'll
right.
speak good on a high level, then I'll have Jad kind of get in the weeds. So the quant grade is taking quantitative metrics that quantitative investors and traders use, basically quant funds, and making them available to retail traders and investors. So metrics like Sharpe ratio, Sortino ratio, max drawdown, ROI, all these different metrics, and combining them into one single holistic grade. Then Jad kind of talk into the details.
Exactly. Yeah, that's basically what it's doing. So we're using lots of machine learning models that will look at all the price data that you have on all the coins, because now we have a lot of coins on our platform. We have over 6,000 tokens. So if you want to really grade all of them in terms of potential ROI, you really need a model that could do it and scale to all of them together. And we're using a machine learning model essentially that will look at all these data points, the quantitative metrics, and it will try to find patterns in that data to try to predict which coins would have potentially a good ROI and which not, by using the historical metrics and also some forward-looking indicators as well.
Very good. So Ian, you were saying that last bull run you used a spreadsheet, and I think everybody who's been around since the last bull run will remember that spreadsheet. This time you have TOKENMETRICS, which uses a good number more sources of input. Have you actually looked at the comparison of accuracy between your spreadsheet and what you're doing now?
Well, I mean, it's hard to compare because the spreadsheet was limited in terms of what we could do. With TOKENMETRICS now, we now have over 6,000 assets that we're grading essentially every single day, right? The spreadsheet was just one guy trying to keep up with the whole market. And while that was pretty successful, because the success rate back then, we were getting about 80% success rate, meaning that 80% of our investments were positive and the average return was a 5x, which was pretty unheard of because early on during the prior to ICOs really kind of taking off, 4 out of 5 projects were scams, right? So we're able to filter out the noise, but then it reached a level where the market kind of peaked. And then we had to really kind of innovate and come up with a better way to analyze new projects, right? Because it's always a cat and mouse game. And bringing on smart people like Jad, our entire team, right? And then going through and trying to figure out how do we get better? How do we build a system that can do what we're doing at scale? And that's where, working at IBM Watson, I knew that machine learning was the future. So I said, how can we apply machine learning to crypto and turn this into a product that people can use? Because the spreadsheet was basically the prototype. It was the MVP. And having over 1 million people just access a spreadsheet, I knew if we turn this into an actual application with AI and ML, people would definitely use it. And now that we've launched this, it's been amazing.
Yeah. Yeah, I know personally it's been quite useful just from a few picks that it's helped find, like Matic, like Chili's, like other things like that, where you just see them absolutely take off. You're getting 60 to 80x on these coins just from being able to choose the top coins that come up on TOKENMETRICS. So that's pretty cool. But that brings me, and anybody who wants to check it out, there will be links down in the description and the pinned comment to get a discount on TOKENMETRICS. But that brings me to one of the biggest questions I get about TOKENMETRICS is that there's a lot of information there. So, I mean, you have the different time frames, you have daily, you have weekly, you have monthly, quarterly, yearly. You also have a lot of different coins. So how can someone best use that?
Great question. So we can kind of go through the platform, but I like to classify people into 2 camps, either an investor or a trader. An investor is somebody who has a long-term mindset. In crypto, I would say that's probably somebody who's looking to invest for 3 months and longer. In equities, it's probably 12 months or longer, but in crypto, because it's so volatile, I would say 1 quarter or longer. So their time horizon is basically quarterly and yearly. Then for people who are mainly speculating, I would say they put anything that's monthly and less is kind of their camp. Once you figure out what kind of person you are, then that makes it easier in terms of the strategies you have to employ, right? So somebody who's investing longer might want to have more of a passive approach, kind of set and forget. So most likely we would recommend they use our indices, right? Somebody who wants to speculate, they want to get in and out, do more trading, they might do more of a sniper approach, picking one single coin, whether Chili's, Polygon, and going to that, right? But the way I view it is having a balanced approach is always best because in crypto, anything can happen, right? So let me actually pull up the site here and I'll walk you through how I personally use TOKENMETRICS. So when you log in, first of all, I'll say our 3 main products or features are 1, the ratings. So the ratings are designed for people who want to have a sniper approach, basically 1 shot, 1 kill, right? So in this case, if you're looking to invest for 1 quarter for 3 months, our quant grade loves Terra. It's loved Terra all the way. Actually, if we go back here, it's loved Terra for a long time. And we just recently launched our visual trends indicator, which makes it even easier for anybody to trade any cryptocurrency, over 6,000 cryptocurrencies. Using our models, our AI, we can go through and tell you when our models turn bullish. So for example, on Terra, it turned bullish at 62 cents. Then it turned bearish at $13.41. So this is different from typical moving averages. Jed can kind of cover this as well, but it's designed to help you capture the huge rallies and swings, right? So we prefer this, the visual trends indicator, and the quant grade for people who want to have a sniper approach where they just pick one coin. Maybe it's a coin they've been trading all year or coin in their portfolio that they're very bullish on, but they want to know when to get in and when to get out. Jack, could you kind of speak to the visual trends indicator?
Yes, of course. So like the name says, it's a trend indicator. So it's just telling you what the current trend is, if it's bullish trend or a bearish trend. Now, while testing this indicator, you can also use it as a trading strategy so that you don't keep on trading with your emotions. You know, like you don't want to be reading the news every day and FOMOing into some coins and not. You really want to have a plan when you're trading. You want to know when to get in and when to get out without your emotions telling you otherwise. So this is a very helpful tool that will allow you to trade with discipline. And then it will also give you information about the current trend of that specific coin or that specific market in general. And the way it's being used through some adaptive moving averages, which essentially using moving averages, I'm sure you guys have probably tried and see every time you have a crossing with any like exponential moving average or simple moving average, you might get a buy or a sell signal. But when you actually backtest it, which we did extensively at TOKENMETRICS, a lot of these signals are false, and you get so many false signals, and you are always late to the trade that you really want to do. So we tried to solve this problem by making these moving averages adapt very fast with the market conditions. Now, that being said, it's a trend strategy. So every time you have a clear bullish or bearish trend, it will be very, very helpful to follow this strategy. But whenever you have difficulty in seeing what the real trend is, like when it's really choppy, then this indicator will give you some false signals. Now, the nice thing about it is that these false signals will correct themselves very fast. So for example, you might get a bearish and then a bullish, like here on Terra, that corrects itself very fast. You get a loss of like 5% compared to the potential of having a huge drop if you didn't see that bearish signal. So it really helps a lot when you have bearish market conditions, because you'll be able to sell and buy back at a much lower price.
Yeah, thank you, Jad. Yeah, I mean, so that's pretty much what I would use if I'm doing the sniper approach. Basically one coin. So for example, same thing with Polygon Matic, which I know is popular on your platform. So as Jad mentioned, our visual trends indicator is designed to make trading and investing in crypto so easy that even your grandparents could do it. Because pretty much you come here and it's just basically red dot, green dot, right? Bearish, bullish. And as you see here, it was bullish on Matic at under 2 cents, right? And it's been bullish the whole time, right? As Jad mentioned, it's designed to help you capture the rallies, because other moving averages, typically they'll have you exit during these large corrections, right? But it's able to adapt very quickly and try to figure out, okay, now's not really the time to get out because there's more upside. And that's why it's still bullish on Polygon and Matic. Now, for somebody else who maybe wants to build a portfolio that's diversified, then we would recommend the indices. So when you log into our site, the indices help you allocate capital effectively across whatever time horizon, whatever exchange you'd like to invest in. Pretty much you can custom tailor this to pick any exchange we have here, from Binance, Coinbase, Kraken, Uniswap, KuCoin. We're in the process of trying to add FTX and Binance US as well. But ideally, you say, you know what, I only want to find low cap gems on KuCoin or Uniswap that are good for the next 3 months, the next 1 month, the next 1 day, the next 1 year. And then it would go through using our system, our quant grade and the AI, and build a model portfolio that's diversified. Now with indices, they're not designed to give you the 100x, but they're designed to give you something that's safe and stable, right? So in this case, if you want to go to Uniswap and hold for 1 month, it recommends Ethereum, the DeFi index, request, and then basically stablecoins. Jack, could you kind of speak to how this works?
Yeah, definitely. So the first thing you need to know about portfolio construction is that you are constructing a portfolio to diversify, because if you really know that a coin is going to 10x, then you put all your money in that coin. But it's never like this. Whenever you're investing or trading, it's a game of probabilities. It's never, nothing is certain when you're trading. So you always want to find what risk you're taking, and you always want to see if you can offset that risk in some way. Now, when you're building a portfolio, minimizing risk is done through diversification. So for example, you would get a portfolio of 10 coins so that you know that if 5 coins are going down, the other 5 coins might be going up so that they offset the losses. Now, if you are ever looking at your own portfolio and you look at one day, all of your holdings are up or all of your holdings are in the green, you might be very happy about it and excited, but this is actually a bad sign, because it probably says that you aren't diversified enough and that in one day, all of them are going to be red together. And that's why when you want to build a portfolio, a big component of it is the correlation or the covariance matrix. So you want all your assets in your portfolio to not be completely correlated together. And not only you want to diversify the holdings, but you always want to diversify the strategies. For example, here when we saw that we had a big allocation to stable coins, it's because you are already diversifying using stable coins because the return is different than other coins, but you're also diversifying the strategy, which is essentially not gaining and not losing at that proportion, because as of now, the trend of the market is choppy. It's not as bullish. It's not a clear uptrend as it was before. So it's always a good idea to diversify. And that's why we are using a model, Black-Litterman, which does all the diversification for us by taking into account the quant grade and all the machine learning that we do on the back end.
All right. Yeah, so I think a lot of there are some people who are definitely more of the investor mindset like myself, but I think a lot of people are looking for the moon coins that they can find. So if we go back and take a look at the ratings, you mentioned that Terra's been up there a lot, and I've seen Terra up there a lot. How does someone know which coin to choose?
Good question. So what I like to do, I like to look at coins that have a grade higher than 70%, ideally 80% or higher. So the higher the grade, the better. And then let's say you wanted to find the next 100x, right? You can come here and add filters, but this is also dependent on the market. If the market is crashing, sometimes there's no 100x, right? So right now, in the next 3 months, as you see here, it's pretty bearish actually, right? It's only bullish on Terra, but then you have stablecoin, then FTX, then Bitcoin, right? So it's saying if you're looking for, let's say 5 coins to hold, these are the 5 coins it likes the most right now for the next 3 months. So basically Bitcoin, FTX, stablecoins, and Terra. But let's say there are actually lots of bullish coins. You could come here, add a filter for market cap, and say, show me coins that have a market cap of, let's say, 30 million. So if you're trying to kind of go degen, you would find those coins. Right now, there isn't anything really likes that's under 30 million. Can I put an extra 0? Yeah, so right now, there isn't really anything it likes at this price point. So I'll take off that filter. But for me, what I like to do is I like to come here, add filters, and then the quant grade is the overall grade I would rely on the most if I'm trying to take a sniper approach. But you can also leverage the price prediction as an additional data point. This is a rolling 30-day price prediction, meaning that it updates after every daily closing price. So meaning that it's not really meant to be a set and forget prediction, because as we get more historical data, it basically will change the price prediction, right? Meaning that if you come back here a week later, you have one week's worth of data, so the price prediction will update for the next 1 month. So I like to factor that into the analysis, but the quant grade to me trumps everything if you're trying to take a sniper shotgun approach to investing in crypto.
Yeah, if I can add to that. So, when you're trading, like I said earlier, you always need to think about probabilities. It's never certain. So all these data points that you have will help you understand if you have an edge with taking this trade or investing in this coin or not. And what I mean is, when you look at Terra that has a good quant grade, that's a data point that's telling you that it might be that the probability of Terra doing well is high. And then you go and you look at the trends indicator, which also tells you that it's a bullish trend, which adds to the probability that Terra is going to be good. And if you're still not convinced and you want to go deeper, you can check the indices as well as the price predictions to see the holistic approach and then understand what the entire probability is of this being a good coin to hold or not. So it's never just look at one data point and go all in. You have to think in terms of all the data points that you are providing, and knowing that anything can happen in the future. So you want to be flexible, you want to be open, and you want your investments and trades to reflect that there might happen something that you don't expect might happen. So that's why you need to think in terms of probabilities and collect as much as you can and then make a decision.
That's a great point, Jad, because what I just mentioned, Terra has a positive price prediction, a positive visual trends indicator that's bullish, and a very good quant grade. So this basically completes the checklist, right? So in this market is saying, if you're going to speculate and do any kind of trading or investing, out of everything you can do, the project that it thinks has the highest probability of doing well while not getting wrecked is Terra, as Jad just mentioned.
Mm-hmm. So the price predictions that you have there, how do you use that, and how do you kind of predict the price?
Yeah, great question. So the price prediction is looking just purely at historical pricing data. That's the only data point it looks at. It's not looking at anything else, just the chart in the past. Then it goes through that historical data and then builds a model to try to forecast where the trend is going, right? So I don't use this as trying to predict the exact price. I look more towards this as an indicator in terms of where the trend is going. So is the trend bullish in the next 1 month, as here in Terra, or is it predicting the price going down? Right. So for me, it's kind of binary. It's not really, hey, the price will be at $23. Right now, that could happen. I like to view this more as almost support and resistance. Right. So for example, if you see the price of Terra approaching from $16 to $23, maybe a good time to take out your initial investment, to take out some profit. Right. But as Jad mentioned, this is one single indicator that you have to view holistically with all the other indicators, the visual trends indicator, the quant grade.
Yeah, and to explain a little bit more how this prediction is being made, it's through a machine learning model that's called LSTM, which stands for long short-term memory.
I'm curious about one coin. So one coin that I saw on a lot of the top charts was Coco's BCX. And this is something that recently has kind of dropped down. But I remember before Chili's took off, and Chili's did like 80x, it was doing kind of the same thing that Coco's BCX. So could you guys walk through this coin now and kind of tell me what it's looking like in terms of in general?
Yeah, I mean, so looking at this, the quant grade is pretty optimistic in terms of where it's going. Looking at the visual trends indicator, however, this shows this has turned, let me actually zoom in here. This has turned bearish, which does bring some concern. Now, I'm not sure if Coco's BCX had a change in terms of the token supply. I think which kind of might make it tougher to predict, Jad.
Yeah, it changed the token supply and the price way back, I think in before January.
Looking at it, we see that it's turned bearish on April 15th. at $1.20. And then if we go to the high frequency, so difference between high frequency and low frequency, high frequency does more trading, low frequency does less trading, right? Jack can maybe kind of expand on this. But for somebody who wants to do less trading, you'd choose the low frequency trading option. But looking at it, both of them have turned bearish, which isn't quite a good sign. And then if we go to the price prediction model as well, yeah, this one has basically been hard to predict, because over here, it basically just kind of went ballistic. And even our models couldn't really predict where it was going. It just kind of shut off, right? That's crypto for you, right? But it did kind of come back down to earth over here, right? So this one is tough to predict, right? Because I would say the price prediction is flat, basically negative. The visual trends indicator is bearish, while the quant grade actually, let me change over here because I was in, yeah, so quant grade for holding for the next 3 months is also poor. However, if you're holding for a year or longer, right, it's actually optimistic because maybe it thinks this is a chance to buy the dip. Ben, Jad, anything to add to this?
No, you said everything, I think, except that Coco's BCX is one of the coins that was caught early by the quant grade. It was caught a few months ago, and it was part of our low cap indices. And our low cap indices on average have been doing very, very well. Like the best one has done a 600% within the past 2 months. And the worst one has done a 50% return for the past 2 months. And this is the nice thing about building a portfolio. Since you are trying to diversify, you're trying to find 10 coins that are different than each other, and you're giving a weight for each one of them. And then you are very likely going to find these gems that will 10x, because in our low cap indices, I can probably show the performance of the indices. If that's okay.
Go ahead. So as Jan pulls that up, so for example, we had synthetics, and our indices do not like having synthetics and Ethereum in the same portfolio because the correlation was pretty much the same. So it basically was saying holding synthetics, you might as well hold Ethereum because I believe the correlation was 0.95, right? So we're saying there's no added advantage of holding SNX if you already have Ethereum. And as a result, myself actually sold my SNX.
Mm-hmm. Yeah, definitely. And yeah, so this is the graph of the performance of all of our indices. So the red dotted line is Bitcoin's return, which is since the start of our indices on February 9th. So Bitcoin since then has done a 17% because of the recent correction. And our indices, 36 out of 38 so far outperformed Bitcoin. The total crypto market cap did a 56% return. And then we have our best performing index, which did a 4.26x, and the worst one, 13% return. On average, we almost did a 2x on our indices. And these ones, the ones with the big rallies, like here, I remember here, I think we had Mixin, we had XDC, I think. We had we had coins that did 400 or 500% quick, and they were in our indices, and that's why we had these big rallies. Now, also the side effect, of course, everything is good as bad. You have, when you are in a low cap index, you are much more risky because these coins aren't as liquid as the others, so the volatility is much higher. So you can see here. The correction of the low cap index is much bigger than a correction of a high cap index.
Mm-hmm. Yeah, it's pretty awesome. So, I mean, so far with the indices, because they update somewhat regularly. So how does someone know when the best time to buy those coins would be?
Yeah, good question. I mean, so each index has a time frame. So the daily would update every single day, the weekly every single week. On the site, we do have basically an estimate in terms of when it would update, but sometimes it does take longer by maybe half an hour to an hour. But ideally, you want to find an index that either is about to update or just recently updated, right? Because if you come in, let's say, more than halfway through, it might be better to wait until the next rebalancing, right? So for example, if you get into the monthly index after a week and a half, it's still a good index, but maybe the weekly is better until the next rebalancing.
Yeah,
Okay.
I agree. I agree to that, because sometimes when you look at the index and you already have a coin that went up 50 to 100%, then you might not think it would be a good time to go into it. So that's why we have this time frames. It gives you flexibility to choose which one, because all the time frames are also optimizing for the diversification benefits and for the return as well. So if you come in late, you can always look at the shorter term index, because it will offer the same diversification and return potential.
All right. So here's the big question. Somebody comes into cryptocurrency, they have $1,000. All right. They click the link in the description or the pinned comment, get a discount on TokenMetrics, and then they're like, how do I best use this? How do I turn this 1,000 into 10,000? What do I do?
Well, great question. So I would say, one, avoid Uniswap because the fees there are high. And I believe, Jack, correct me if I'm wrong, one of our best performing indices has been KuCoin low cap, right? So for people who are looking for fast gains, obviously not financial advice, if you're comfortable losing all your money and you want to look for a low cap index hidden gems, we would likely say the KuCoin indices, because those have really done pretty well because they have lots of low cap gems. Because by the time something is on Coinbase or Binance, most of the gains are already gone. Then
Yeah.
add to that?
Yeah, definitely. If you have $1,000 that you are willing to lose, even if a portion of it or all of it, you want to make a big return, you would likely have to go to the low cap indices, because these are the potential coins that will shoot up 5x, 10x very quick. But you also need to keep track of the trends indicator that you have, because it's very, very hard to see your coin go up 10x and sell. You're going to be like, it's going to go 100x. I'm not going to sell. I'm not going to. So it's very useful to know when you need to sell. So this trend indicator helps you find out when you should sell. But it's also important for you as an investor, as a trader, to set your profit target and stop loss levels before you enter a trade. That way you will follow your plan that you have, and you will remove the feelings of, oh, I really want more gains on that coin. I want 100x. I want 200. That will remove this emotional part and will make you more relaxed. And when you're more relaxed, you will trade better.
And then in terms of time frame, is there a benefit to going the daily as opposed to the weekly or the monthly?
I would say it depends on your time frame. So if you really are looking for to take huge risks to make a quick buck, then daily and weekly are your choices. And that's why the daily and weekly we only assign 5 coins to these indices, because you don't want to diversify too much if you're just holding it for one day or 1 week, especially that you need to start considering transaction costs. When you buy each one, you're going to pay costs. When you sell each one, you're going to pay again some costs. And so if you want to do a quick buck very quickly, which is very risky, you can go to the low cap daily or weekly. But if you want something that will give you returns in a low volatility way while still giving you the crypto returns, then you would look for the monthly, quarterly, yearly, because they have 10 coins, it's more diversified, and things like that.
Yeah, then one thing to add on to that. So what we've seen in the history of the indices is that during a bear market or correction, the shorter time frame indices do better. So for example, back in September when the market crashed 40% in a week, the daily and the weekly did the best because they weren't holding anything for too long. Right? They're able to adapt very quickly and go into stable coins. while the quarterly and monthly, I mean, the quarterly and yearly didn't do too well during a sharp correction because they take a while to update. However, they also did the best or have done very, very well during bull markets because they hold the longest, right? So they're able to capture those large rallies.
Great. All right. Well, any other advice that you would have for people using token metrics?
Yeah, I would say when you join, either try it or as a customer, check out the daily newsletter. We put out content every single day, 7 days a week, even on weekends. We have code reviews, we have market updates, we have Jad with his quant insights. So we try to give you regular news and updates and market analysis every single day, right? Especially with Bill doing his chart work and TA. But for me, what I love the most are the code reviews, because that helps you with projects that haven't even launched yet. So for example, if you're trying to find a project that's about to launch or about to have a token sale, how do you evaluate it if there's no pricing data? Right? That's where having code reviews going through the actual GitHub, having our engineers go through audited code and then score it, that has worked out pretty well, because that's how we found Matic before it was even trading back in 2018.
Mm-hmm. Anything, Jed?
I mean, yeah, I mean, TokenMetrics, the platform itself is still improving every day. That's what we're working on every single day. And yeah, we're trying to make it as simple as possible for investors to understand and to know what to do and when to do it. But investors also, people need to have their own discipline as well when they are trying to invest and trade. They need to understand the risks involved and everything. But at TokenMetrics, really, we're trying to make it as simple as possible. We're giving a grade from 0 to 100 to coins. Everything that has a higher grade than 80 would be a good investment. If you need more, you can check the indices, which are doing all the work that an investment manager would do, which diversifies, finds these coins that have high ROI potential. So that the indices itself is everything you need to do to invest. And then if you want to invest on your own and on your own portfolio, then the quant grade and the trend indicator together, this should be doing the job for you to help you understand what to do.
Perfect. Well, that sounds great. Thank you so much for joining us today. It's been a pleasure. Anybody who wants to, you can check out TokenMetrics. There's a link down in the description and the pinned comment. It'll get you a discount on the platform. But thank you guys again, and then we'll catch you next time.
Yeah, thank you.
Thank you.
Thank you.
Thank you for having